Excuse me. Hello traders, this is Jim Comiskey coming to you live from MF Global. It's Tuesday the 25th of October. I'll give you some color on the metals complex amongst other things. Yes, Turd, thank you. You have indeed inducted me into the great foamy yellow hat club. Much appreciative, thank you. By the way, thanks for everybody that has listened on Turd's site, tfmetalsreport.com. Almost 10,000 people. That's awesome. Thank you. What we're going to do going forward here, and again, nothing hard and fast, but me and Turd are kind of envisioning, since it was so well received, we're thinking of doing like a special report thing, like when we get moves, like for instance today. We'll do like 10-15 minute blurbs as to, Turd's handle, my handle on what we think are influencing the markets today. Rather than like a 45-minute rant. It might be more timely, more helpful to you guys, to the trading community. But I should note here that, the opinions that I'm no doubt about to voice are mine and mine alone, and they're not necessarily shared by MF Global, okay? On to the rant. In a phrase, back on, the gold up $54 to 1706.90, 1708.40 the high, okay? So it's obviously it's a healthy situation when gold gets back through another handle. Okay, silver up, here it is again, up 161, 33.25. Got to 33 and a half moments ago. The copper, it was the tell yesterday, but it's not participating today. It's down 370 to 341.20. Okay, greenback is up just 8 ticks. Euro down 23. to 139.17. By the way, greenback 76.35. Crude up $1.87, 93.14. Crude's put together an incredible run the last 3 days. It's rallied about over $8. Maybe Hillary Clinton's saber rattling with Iran has something to do with it. I don't know. Maybe it's this hurricane that's setting up south of the Gulf, in the southern Gulf region, has something to do with it. But either way, shorts are getting squeezed in a big way in the crude markets. Okay, to Europe. This is courtesy of Zero Hedge. Is the Euro Summit already a failure following an early ECOFIN meeting cancellation? Now, this was last night. Apparently, a man named Jacek Rostowski. He is the Polish finance minister. Okay, he currently holds the EU's rotating presidency. Okay, Poland currently holds the EU's rotating presidency. So this gentleman, being the finance minister, is charged with convening a meeting of all 27 EU finance ministers tomorrow ahead of the big summit to lay the groundwork for a final agreement. However, he sent a letter to the 17 Eurozone finance ministers, making it appear that we're going to have a cancellation here, folks, bottom line, due to a failure to agree on outstanding issues. Nobody saw this coming, huh? Anyways, to Rostowski's letter. Gold making new highs, by the way, as we speak here. Anyway, sorry. As things stand, at present, I understand that the full package may not be ready by Wednesday, October 26th. Were this the case, the presidency would need to postpone the ECOFIN Council meeting by a day or two. Therefore, I would like to ask you to keep me informed on when the remaining elements of the package will be completed by the Eurogroup so that I can convene the ECOFIN meeting as promptly as possible. In other words, they continue to dither, fiddle while Rome burns, okay? Remember late October, we were looking, late September, we were looking for some kind of resolution. If not, the situation's extraordinarily complicated, but if not some kind of resolution, at least a game plan. They can't even agree to stay in the same room right now. It's ridiculous. The one thing markets hate above all else, said this before, I'll say it again, is uncertainty. And we just got slapped with a heavy dose of that, even more heavier, this morning when this was announced. Okay, so here, this is courtesy of CNN Money. I normally don't like CNN Money, but it's a good write-up. A gentleman named Ben Rooney wrote this. Europe, grimmer by the minute. On Wednesday, government, it's unclear, by the way, whether they're going to even meet at all now. All right, but it appears as though just for cosmetic purposes, quote unquote, they are going to hold a meeting. On Wednesday, government heads from all 27 members of the EU will gather for a second time, following a summit over last weekend. EU politicians have promised to deliver an ambitious and durable solution to a crisis that poses the biggest threat to the euro since the currency was launched over 10 years ago. The sovereign debt crisis threatens the very existence of the eurozone. Absolutely. Said Howard Archer, Chief European Economist at IHS Global. It is therefore absolutely imperative that European policymakers finally deliver a major package. They're not gonna, okay? In fact, there is what's a gentleman, a customer of mine, a friend of mine, he basically used the term the bazooka option. Okay, now the bazooka option, basically it's like the last weapon, the only weapon in the Keynesian arsenal. Just keep throwing enough money at a problem and it'll go away. Okay, so I mean they're talking 400. I mean the numbers are just so mind-bogglingly huge. There's no way you could envision $2 trillion sitting in a room or a vault or a truck or a cruise ship, for God's sakes. But anyways, the latest talks have focused on three challenges. Okay, just to recap here. Restructuring the Greek government's crushing debt load, strengthening European banks, and boosting the effectiveness of a limited rescue fund. Okay, to Greece, first of all. Main issue, how much is the private sector going to pay? Okay, what kind of a haircut are the banks going to have? All right. Now, bondholders had agreed in July to a 21% haircut, 21% reduction. Okay, now the talk is getting north of 50. So we'll see what happens there. Okay. Banks, European banks need to raise capital reserves to withstand a default by Greece or another euro area government. It's coming. The tab could total as much as $200 billion. I mean, what? Just throw numbers out there. $200 billion. You know what? Why not just say $2 trillion? I mean, okay, the bailout fund, the EFSF, European Financial Stability Facility, a 440 billion euro fund that was recently empowered to intervene in sovereign debt markets and lend money to governments, needs to boost its capital. First of all, that fund literally has approximately 20 billion in like real money, okay, in it. The rest is pledges, okay, pledges. Kind of like other countries around the world, they're funding of the UN, okay, pledges. The money isn't really there, okay, which is another reason that the markets are all stressed. How are we doing? Okay, sorry for the interruption there. All right, move on here. Oh, there. I kind of made a kind of a smart-ass face when I read about another country ready to go. Okay, there is very little doubt that Italy is next on the chopping block. Okay, and Berlusconi is ready to lose his government, his coalition, his center-right coalition. This is from the FT, Financial Times. Okay, Berlusconi's coalition government in Italy appears to be in danger of collapsing over EU demands for a demonstration of concrete action on economic reform at Wednesday's summit of Eurozone leaders. So this doesn't end. This whole debt issue, you know, as I've said over months and months and months now, for those of you who have been listening to me, all these banks are interconnected. Okay, all the countries are interconnected. This is the way they've operated for, since post-World War II. All right, so if one goes, the other goes. And it's as simple as that. Now, the Italian situation is far greater, that just due to their size, the size of their economy, is a far more distressing, could be a much greater impact event on the Eurozone and hence the United States if the Italians get in trouble, and they're in trouble. All right, now the Italian bond market, in other words, the amount of debt that the Italians have out there, 2 trillion euro. Trillion. With Greece, we're talking billions. With the Irish, we're talking billions. You know, trillion. Okay, and they're talking about a 400 billion pound, or euro rather, EFSF fund. Okay, and that's not even adequate. Okay, it's a bit frightening. Now, I got a good story here, and I'll try and pick up the pace. How much will the contagion? How will the contagion spread to the United States? This is from a gentleman. Good stuff, Chris Martenson. I think I touched on him yesterday, but I want to read this to you, okay? There's 9 steps that he has outlined. I agree with most of them. Therefore, I'm just going to read this to you. Okay, how the contagion will spread to the U.S. Step 1, fewer and fewer dollars will be accumulated and stored by various central banks. Foreign treasury holdings will begin to decline. But we're already starting to see that. There's a report that comes out. It's called Net Treasury Capital Inflows. It's out, I believe, basically around the middle of the month, every month. Okay, and the Chinese have already started reducing their holdings, even though they're still number 1. Okay, step 2. Federal borrowing continues amidst a sea of squabbling over meaningless, barely symbolic cuts to spending, even as official foreign demand for treasuries wanes. Fair enough. Step 3. Private participation in treasury auctions begin to wane. That's already happening here. Okay, the ratio of direct to indirect bids is changing, is shifting dramatically. All right, treasuries traded on the open market begin to creep up in yield. Absolutely, we're seeing that, but the Fed is still actively, undergoing Operation Twist to prevent that from happening. But once they're out, watch out for yields to increase dramatically. Bonds to sell off. Step 4. Okay, the Federal Reserve, having publicly committed itself to maintaining a zero funds rate through 2013, therefore will have or find itself in an awkward position, having a safe face. All right, funneling more money into the Treasury market. In other words, another round of QE. They're already talking about that. Step 5, China takes an increasingly dim view of the United States. Starts selling its treasuries, pushed by a shift in foreign perception of safety and utility. And so the selling of treasuries starts to pick up. Step 6, the Fed has to raise rates. It's inevitable. It's coming. All right, they won't be able to pull that credit back quickly enough. Okay, the liquidity back quickly enough. I apologize. All right, so in other words, they're going to have to slam on the economic brakes by raising rates rapidly. Aka Paul Volcker in the 1980s. Step 7, interest rates spiral higher. We get into a classic debt spiral. Step 8, the interest rate spiral creates a fiscal emergency for the United States government. Step 9, while it is politically easier solution, money printing leads to the abandonment of the U.S. dollar as the main reserve currency of the world. There's 9 reasons to buy precious metals, okay? If you're buying physical, just look at your own balance sheet. Continue to stack up on weakness, okay? If you're buying futures, please use tight stops. If you're trading ETFs, just monitor your position. If you would like to email me, please feel free to do so. My email address is just the letter J, COMISKEY @mfglobal.com, or give me a call at the desk. My number 888-800-5373. Look forward to hearing from you. Thanks again, Turd. Always remember that trading commodity futures is inherently risky and not suitable for all investors. Thanks, guys.